Afternoon. How are we all doing? We're on early. This is fun, isn't it? Why's my light yellow? Oh, okay, that's too bright. Okay, that was weird. How are you doing? Good. Afternoon, Kennelly, Amy, Baggy, Jerry, David. There's no one here, look. No one got the memo. Afternoon, Fletch, Gregors, Marcus, Marco, even, Monkey Man. So it's non-fun payroll day. Fun. 7 minutes to go, as the timer says. So we've got the unemployment rate for the Canadian dollar and the US dollar at 130. Unemployment rates, one of the key fundamental drivers for FX. So interest rates, inflation, GDP, and unemployment. So at the moment, both the US and the CAD are in trouble. Because their inflation, that's not the CAD, their inflation figure is ticking up, which means ideally they need more interest rates. However, their unemployment is also ticking up, which means they can't increase their interest rates. But the Canadians are flat on unemployment, so maybe they can. So if these figures come out today as low figures, the unemployment has gone down, it gives them the free rein to do that, which basically will push that down, which is what they want to do. These figures come out as higher than expected today. It will put big pressure on them not to increase their interest rates, which means they've still got the problem of rising inflation. How do you get around it? So these are very, very, very important figures today. Hard to tell what the market will do. Sometimes it whipsaws like crazy. Sometimes it doesn't do anything. Sometimes it flies up and then it pulls back a little bit and flies further. Totally random. It all depends. The market is not logical. It does what the hell it likes. So we'll find out what happens. So preparation for it. All my US dollar exposure, which is currently short, is protected as much as possible. So pound US dollar, this position and this position have a trailing stop. If it flies, I fly with it. If it dumps, I'm out. And I can add these back on again at a later stage, but they're protected so that I won't lose the profit on them. US dollar Swiss, same thing. Have a trailing stop on this position here, which I'm very, very close to getting stopped out on in profit anyway. This one here I'm going to leave on. If it flies up, fine, I'll add another one and get out later. And I've got the US dollar yen. Not sure what to do with that, to be honest. US dollar CAD. This one's going to be a tricky one because the US dollar CAD is hard to gauge because the figures are coming out on both of those. So TP is just under 100% of ADR. Might go down a little bit further on that. We'll see. And the US dollar yen, I'm going to leave that. I'm dealing with this as a separate entity at the moment. I might regret that. We'll find out. Anyway, we'll see what happens. I'm sure there was another one I had on. I don't have a euro US dollar. I got out of that yesterday. New Zealand US, sorry, was the other one. I thought there was another one. New Zealand dollar US dollar. That's a 1 in, 1 out. So that entry was there. That's locked in with a trailing stop. Either out of it on the news or up to TP up there. I posted this one in the Telegram group. So basically, as much as possible is protected as either a break even or a get out totally, or we just go with it and we get a run. But if we get a whipsaw, which quite often we do, I'll get stopped out and then it'll run and I'll go, oh God, I could have made a lot more. You don't know what's going to happen. So you're better off protecting your capital. I don't know what to do with this US dollar yen. I'm going to trail this top position And I'm going to trail this second position. So this one and this one will not go into drawdown. They will both bank profit if it pushes, which means I'm just left in DD on those three, which I can handle. But I don't want to go into DD on 5 positions just in case. Just minimizing the risk on the news. We'll watch Euro US. Pound US and Euro US are the ones that tend to get the most volatility. So we'll watch those. We'll keep an eye on the Dow as well. Indices will move to. What happens? Afternoon, David. Everyone else I haven't said hello to. Lucas, Emac, Harold, Asta, XRUpdate.news, Peter, Tom. So the spreads will go nuts in a minute. We've got 3 minutes to go. 2 minutes to go. So the spreads will suddenly go crazy. And we'll start flicking around like a lunatic as they start positioning loads of stuff in the market, and then they'll hit the button. We'll see what happens. So forecasts, basically for the Canadian dollar, we're forecasting a rise in unemployment, which is negative CAD. For the US, we are forecasting a drop in unemployment, which is positive for the US. So very mixed bag. The ideal for me would be unemployment going up on the Canadian dollar and unemployment going up on the US dollar, because that would add double strength to the US move down. But hey, ideal world, I'd be a millionaire sitting on a beach drinking Mai Tais, but I'm not. So we go. DAX this morning. For those of you who weren't in the live room this morning, nice easy break today. Pre-market range was a bit tight. So that wasn't taken. Took the 5-minute ORB this morning straight up to TP within 15 minutes. Stopped out on the second half of the position within half an hour. Nice healthy profit on that. Okay, 50 seconds. Okay, spreads tighten, starting to widen a little bit, getting a little bit more volatility coming in. Nothing else has moved today, no ADRs at all. So flat market. Usually get a fairly flat market ahead of non-farm. Okay, here comes the spread, and here comes the terminal freeze. Boing! Strong US. Just waiting for the figures to be reported. Oh, Christ, that whole flick passed way too fast. I couldn't read that. Forex. Got it out there. Yeah, okay. So 5.5, that is positive Canadian dollar. Be positive US, negative US. That's interesting. So the US dollar had a massive rally off that as expected. Well, it's not as expected. It's the same as before. It's negative US. This is probably a whipsaw. So market's frozen as usual. This normally happens on non-farms. I would expect this to get rallied all the way straight back up and go the other way, potentially, unless the market's not really that interested in that unemployment rate, but imagine it is. So Euro US dollar, so just banked load, 1.9% banked. That's a hefty old move, that. When the terminal wakes up again, we'll see what the extent of the pullback is. Okay, so starting to pull back. So Canadian dollar, let's have a look at US dollar CAD. Okay, so you can see there's, as I said earlier this morning, if you were here, because obviously we've had negative there and a positive there, a positive and a negative make a neutral. So we've gone nowhere on the US dollar CAD because there's no advantage to either of those currency. The US dollar's just had bad news. The Canadian dollar's had good news. CAD's trying to rally. US is trying to drop. So therefore you don't go anywhere. So there's no movement on that one at all. I would expect this to come down from here because we've had negative news and positive news, which is negative US dollar CAD. Look at the other CAD pairs, we'll have big moves down on everything against the Canadian dollar because this is positive for the CAD, and everything US should drop. So we're getting opposite move at the moment on the US dollar based on that news, but this could just be a fake move, undoing some positions, and then they will turn tail and run back in the opposite direction. So same with the indices. Indices tend to go down when the US dollar rallies and they go up when the US dollar drops. So this whole move could be flipped on its head. But as you can see, this is why I said earlier this morning or in the Telegram group, if you're in there, probably not going to trade the US session this afternoon because we've got all this volatility that's now entered into the market. We're going to hit average daily ranges on all these instruments in a second. Or if we don't, we've done most of the average daily range within that news spike. So even if this does pull back into there by market open in the next hour, volatility and the volume has already been placed into the market. So you tend to find that the US Open is very, very quiet. So I'm not going to bother trading the US Open today because there's too much volatility gone in there. And also you don't have any idea on direction. I mean, you never have an idea on directional bias anyway at the Open. That's the whole point of momentum trades. But after it's done that, quite often the market will put in a very strong move in one direction or the other this afternoon. Sometimes it just sits there. Depends on what the news is and how they're positioned in the market. But if they do put a strong move in and you get whipsawed on it, you're not going to know which way it's going to go. So you just end up getting chopped to pieces. So I'm not going to bother with the US Open this afternoon. Done well on the DAX this morning. That paid for a couple of losses on these two yesterday. So calling it a day on the indices. But there's a good fade opportunity on these because fundamentally this should be a short for the US. However, at the moment doesn't seem to be paying attention. So let's just see if there's any forecasts come in. Interest rate futures add to earlier losses after the monthly job report. Yeah, it's negative US. So this spike is totally opposite to expectations. So we'll see what happens. We'll keep an eye on, let's have a look at the pound US. So ADR hits now across the board. So anything that's hit ADR here that is not Canadian dollar related is a potential reversal opportunity. Aussie dollar Swiss, big move there. Yeah, so big whipsaw there. So as you remember what I said, when they pull money out of or put money into a currency, they have to remove it from another one or place it into another one. So the Swiss franc getting a lot of manipulation off of this as well. Again, that should probably reverse. You can't get into this though. Look, this is an ADR hit, but you're not going to be able to get into it. It's already hit ADR and it's already bounced off of ADR. So you missed that one. Aussie dollar, US dollar. So that's a potential reversal, but none of these ADRs, you're not going to get a reversal alert on any of them because the reversal alert is going to be there. So by the time you get the alert, the move is complete. So if you're going to take any of these ADRs, you need to watch price action. So basically, you're looking for some kind of move that looks like a market structure breakdown at the bottom there. But this could well just go straight back up to there in the next half an hour. So Aussie US, pound CAD, wouldn't want to try and mean revert that. That is very good news for the Canadians. Pound US dollar, that should undo. And the US dollar yen also should undo. But market doesn't always do what the news says. So wait and see. So from the unemployment, we've got quite a mixed bag of unemployment over the last few months. So if you look at what we normally get, there's no real sort of pattern to unemployment rates. They change an awful lot. So that's not particularly good, is it? 3.8. So we were on 3.5. We went up to 3.8. We were expecting unemployment to come down. It hasn't. It really puts the pressure on the Fed not to increase those interest rates anymore. Should be negative. We will see. Fake move, I reckon. If you go back and look at previous non-farms, you'll find a lot of the time we do that. And then we, boom, we fly the other way for days on end. So don't necessarily read into that. Afternoon, Dion. Daniel, confused why the NASDAQ just plummeted despite good news for the American economy. Because the NASDAQ does the opposite to the US dollar. Where did you see good news for the American economy? Talking about non-farm employment. Yeah, people in the employment change. There's more people employed, but the unemployment rate has gone up. Gone up, or stayed the same rather, whereas it's forecast to go down. Yeah. So yes, more people have been employed in McDonald's because they've opened a load of new branches. All of the top paying jobs in the large companies have been cut because the businesses are underperforming. That's not good news for the economy. This is why the unemployment rate is the important bit, not the non-farm employment change. This is why everybody calls, they call it non-farm payroll. It's not. Unemployment rate is what drives FX, not how many people in a particular sector have been employed. So Fed swaps shift full pricing of rate cut to September from July. So holding rates for longer. Higher odds of rate increase this year. So putting the interest rates up again. So they've decided to put the interest rates up again. Well, they haven't decided, obviously, but the market's forecasting another rate increase. Not the norm off the back of an interest rate rise, but see what happens. Will Japan react? That is the question. So last night, obviously, overnight, we had Suzuki come out again and say, not so much we're unhappy. Where is he? Oh. There are many factors to determine whether FX moves are excessive. So basically what we got last night was we are not unhappy with what you've done after the intervention, but we are not happy because we are still expecting some excessive moves. What would you call that? I'd say that's pretty excessive. So if they do rally this US today, Japan will be very upset. And the second intervention, as we know, is always bigger. So happy to be out of those two positions, but I am not getting out of those. We'll see. I'm not convinced about this move at all. Afternoon, Virginia. Should oil rally after good CAD news? No, CAD rallies off of oil news because it's the major export of Canada. So it doesn't work the other way around. Oil doesn't rally because Canada's unemployment's changing. It will move. I mean, oil will move typically off of news. Everything moves off the news. But it's coming down like a absolute steam train at the moment, this oil. It's just, we looked at this morning. So this propulsion gap that we are basically testing right now, this was that break that started the run. Yeah. So we had this accumulation for 3 days off of the double bottom bounce. And then the market sat there and went, we're going to break it. Yeah. They pushed up. They came back. They retested it. They added to those orders. So this was the first batch of buyers that started the rally. This is what we're testing now, is the first time back to here. So if we break this low, that invalidates market structure to the upside and means we're short. Pound CAD 125 ADR, don't get in the way of the Canadian dollar. So this market structure move is invalid if it breaks this low, which is only 175 ADR away now. So been looking for an opportunity to buy this. I'm too scared to buy it, to be honest. I don't really like trading oil. It stung me too much in the past. And I don't really see a way to get a stop loss position on this. Position trade, I can see a way to get on. Just get in when you get a reverse alert on the hourly. I covered this one this morning. Wait for an hourly reversal on this. So when the reversal alert kicks in on the hourly, get in long and scale in basically down to that double bottom. If that doesn't happen, get out, because this is coming back to retest the previous lows. And if there's something causing this to come back down to this area, there's something fundamentally wrong there, isn't there? Because all the supply is constricted, the demand is still there and increasing and forecast to increase. Therefore, price has got to go up. Oil's broke at the minute. OPEC didn't come out and say anything particularly exciting, so I'm not quite sure exactly why that's reacted so bad, but it is. What do you think of the NAS? Do I think it'll be undone? Yeah, I mean, fundamentally, yes. This is the thing with non-farm. Need to look at previous non-farms. I've got DAX screenshots, haven't I could use actually. So if you go back to September the 1st and August the 4th, September the 1st. So there's non-farm from September the 1st. Yeah. Big spike up. Total reversal. Carry on down. Yeah. August the 4th. Yeah. Big spike up. 71.8 retracement or 71.9 retracement. Complete reversal. Yeah. Go back to next one. July the 7th and June the 2nd. July 7th. Big move up, accumulation, continuation. So if you look at what happened on July, an as expected result. Yeah. So these are where you've got a result that is not as expected. We tend to get a reversal. What it does after that reversal depends on what the market positioning is and what the market forecasts are moving forward, what the inflation figures are, what the interest rates are. There's a lot of stuff that goes into the pot. But this move is typically not something that is sustained unless it is fundamentally right for the currency. If that had come out as a 3.9, then I would have even expected that spike. If it had come out as a 3.6, I would have expected the spike we've just received and I would expect it to continue much further. So the fact that it spiked the wrong way on the negative news kind of says we should be reversing this whole move. But as you've just seen there, it could be something that is reversed straight away, or it could be something where we rally for the entire day to 150 ADR and then we get out of it over the next 2 days on Monday and Tuesday. Could do anything, couldn't it? So ADR, Euro US dollar, so that US dollar is still pushing. So yeah, all you can do is kind of sit there and see what happens basically over the next day or so and decide. So you can either start to scale into a position on it and go, I assume this is going to undo itself and I'm going to do a return to origin. That will either start to play out today, or you can do that. And if it pushes down to 175 ADR, which in this case would be 150 ADR, which is the low of the previous day, scale in onto a position down to there and wait for that pullback to happen. But there will be a pullback on it. Whether it's a 50% or not, don't know. The reason I'm not also convinced about this is this. Because if this is going to be a move which is going to continue this US dollar, it's going to get shot anyway. It doesn't make sense for the market to rally into the US dollar at the moment when they know damn well that this is going to get hammered down and it's going to weaken the US dollar anyway. So, hey, if it was logical, we'd know what to do, wouldn't we? Afternoon, John. US dollar yen pushing, poking the bear again. Yep. Yes. They do like it, don't they? They like a bit of a poke of the bear. So when the bear pokes back the second time, they won't like it. But like I said, when we got the intervention on Tuesday, we looked at it in detail, going back. Is this the first intervention and we're going to rally it? Or is this the second intervention level and it's the one that's going to move it? We don't know. One of these interventions is going to work. It's either that one or it's going to have to be a second one if they continue the push. So today's news was going to be quite critical as to whether or not this would rally back up to 150 and instigate another intervention. But we're rallying on the opposite side of news. So who knows? We'll have to give this an hour or so and just see if it undoes. Yeah. So, by the end of today's session, we could well be back down there again and flipped the opposite direction. Yeah. Things could go up as fast as they come down and vice versa. Mr. Chris, full-time workers minus 22K, part-time workers plus 151K. The market should digest. Yeah. But this is the thing, you look at the non-farm employment figure. Yeah. That's not what you look at. You look at this employment rate. That's the important this is the scorecarding thing that moves the market long term. This is a short term reaction. This is a long term reaction. But if the market has decided, there's two things at play, and this is what the market will be looking at now. The whole purpose of this figure is to forecast this, because this is what drives it. And this. Yeah. So what the market could well be looking at is we were expecting it to drop. It didn't. We got the same as before. Is that bad enough for the Fed to say yes or no? That's what they need to decide. So yes, it's not as good as it should have been, but it isn't worse than it should have been or could have been either. So the question is the Fed going to be happy that unemployment hasn't gone up? If they are, that happens. If the Fed is unhappy about it not going down, that will remain as is. That's the question. And the market seems at the moment to be inclined a little bit more to thinking the Fed is going to be okay with unemployment not changing, which is understandable. So therefore, they are factoring in a increase. Yeah. But when you say higher odds, yeah, look, 38% chance of banking. Oh, that's Canada. Just seeing if there's any figures coming out on percentage chances. Not's talking at the moment. The euro might get a kick in a minute. Yeah, there's no forecast, but these, you know, it's like this term, this sort of wording that you see, higher odds of a rate increase this year. If the rate increase at the moment this year, odds were 35%, and that's just gone up to 40%, that's still 60% that they're not going to increase interest rates. Yeah, so you can't read into that, oh my God, they're going to increase interest rates. There's a higher chance that they may get into a 50-50 shot about maybe will or maybe won't. So it doesn't actually mean anything. It just means there's a more likelihood that the Fed might think that this is acceptable. Who knows what the Fed's thinking? We'll find out. Next week when we get the PPI figures and when we get the CPI figures. After that, we should probably get some guidance from the Fed. But they're not going to do anything until we get the CPI, which is why I think this has got a high probability of undoing itself at some point. But we'll see. We will see. So there you go. So big, strong moves at the moment. Obviously, the Canadian, you can take as read. Yeah, that's good news for the CAD. So anything you've got CAD related long, i.e. if you're short Aussie CAD, for example, stick with it. That's probably going to pull back a bit and then continue. So we'll, with these big news events like this, we'll be painting propulsion gaps most of the time. So the next candle will pull back. Towards the end of that candle close, you're going to form that propulsion gap. You should get the move away from that propulsion gap. So if you leave it an hour and then either take a break of the low of that candle or just jump in at the end of that candle, you're probably going to leave that propulsion gap in play and the market will continue that direction. US, not so sure. See. Hopefully is not going to... there's loads of them speaking at the moment. I was going to say, hopefully they're not going to dump the euro, because obviously that's just going to really kill that euro US dollar. Maybe we should look in at the pound. Less chance of volatile news on that. Based off the market structure on H1, I took an Aussie dollar yen sell at 94.63. Well done, David. Is it in profit? 94.63. We've just had the reversal alert on that, so we were just about to get the reversal alert on that in 4 minutes. That will be good short. Again, you're going to form a propulsion gap there, potentially, or depends what the next candle does, but looks good for shorts. Any of these yens, so it's a nice continuation short look. So you've got a propulsion gap. That's not a great propulsion gap because it's not really breaking an accumulation, but it is still a large order. And you've got a previous support there, which we're bouncing off of. So support resistance. Turncoat resistance, they call that. If you are a supply and demand trader, which I'm not. Sorry, bear with me a sec. Mimo, been using ORB, looking to start market reverse alerts EA. How is the hedge set file different from others? All covered on the website. Strategies are there. They're all covered in the bootcamp as well. Everything you need to know about the market reverse alerts EA, all covered in the bootcamp, the methodology for position trading, and obviously the market reverse alerts EA. All of these strategies are executable with that. Basically just hedges. So it just goes long and short regardless. It doesn't care about anything. It just gets in on reversal alerts. The hedging strategy on here uses 5-minute or 15-minute, depending which you want to use, and it uses an RSI as an initial trigger. But you could trade it without the RSI as an initial trigger and basically trade on a higher time frame like the hourly and just take every reversal alert and then just let the market movement just basically get you in and out of the positions. But backtest it. Backtest all the strategies, see how you get on with them, see which ones you prefer basically. Okay, 2 minutes till candle close. I'm just going to watch the price action at the end here because at the end of the first hour after non-farm, you tend to get sometimes you get a good volatile move because people are waiting to see what happens for that first hour or the first half hour, really, isn't it? When the hourly candle closes. And you get a load of orders executed because people make decisions on hourly candlesticks. Or I say people, institutions make decisions on hourly moves. They're not looking at candlesticks, but they're making decisions on time periods. So you get a lot of movement sometimes at the beginning or end of hourly moves. So just going to watch this and just see if we get a decent push back up into there. We're going to start an accumulation down here. There's a good chance that this will just pop straight back up to there by end of day today. So just watch the price action. We just tapped into a monthly level on the Euro US as well. So this is the previous monthly low here, which we've tested twice already. That's exactly where the brakes got put on, and we found some buying pressure. It may be that this is just going to do that. So from a stop, from a risk reward perspective, when you're looking at trades like this, if you want to use a stop, you get in whenever you want to get in. Obviously, stops under there, entry there if you want quick entry. Your reward is always going to be targeted at a return to origin move. So wherever your stop is, you get in wherever you get in, but wherever your stop is, it's always going to be under that low. And we're assuming we're just going to put in a V-shaped recovery move. So any of these could be faded. Obviously, bear in mind they could just all turn around and carry on to 175, 200 ADR. Opportunities. Platform's frozen. Wicked. Looking like a rejected 125 ADR. See, I'll have a look at the US dollar yen in a sec. Just wanting to see if this has moved. Okay, there's not a lot of follow through at the moment. Look, so there's the news. There's 25 minutes of nothing so far. So 1 5-minute candle with the news. Market is now sitting there going, I don't know. They're definitely not on the ball, are they? Wanting to dump this or pump the US dollar rather. So am I actually connected? Just rescan the servers. So not a lot of volatility coming in at the end of the hour. So we'll see what happens. Afternoon, Neo. That's really all I've got for you this afternoon. We'll have a look at US dollar yen. So yeah, 125 ADR. Nice rejection off of 125 on that one. So I'm not going to add to this because there's nothing to add to. I've taken off those two shorts on the news. I've got that position in profit. So I'm not going to add anything here to this US dollar yen. If it just comes back down to here, we'll carry on down basically. Did you start streaming early? I did, Paolo. Were you not here this morning? Did you not pay attention to Telegram, Facebook, and all the social media, which I posted out information about me coming on for non-farm payroll early today? No? Okay. Can't help you there then, sorry. Will I make a video on GU? A video? What do you mean? Look at GU. With the chart freezing, you could play that trick on us where you freeze on purpose to trick us. I could do, Marion. But that would be quite childish, wouldn't it? No follow through. So just watch this for the rest of the day. Eventually. I'm not convinced, US dollar. We will find out. Oh, Tom, do you mean the video about the squeeze? Yes, I will do. I'm waiting I'm waiting to get out, basically. Yeah. I've got lots of videos of when it goes wrong on the website. So, you know, there's lots of squeeze videos on here. Aggressive drawdown control, how to survive a squeeze, turning profitable into losing into profitable, that sort of stuff. So they're all to do with when it goes wrong, basically. But this GU has been a particularly nasty squeeze. So I will do, but what I wanted to do was wait to get out of the position. So it would be much nicer to show the finished product. Yes, it's all a loss. Nothing I can do about that. And I know why it's a loss. 9% of it is aggressive drawdown control. So I took an 8% loss last month. 9% of that loss was aggressive drawdown control on that. Failed. I did a slide on it. Which I deleted. So that loss there, which is 19 grand, all pound US dollar. So 8.5 grand loss in total, 19 grand of loss in total on the pound US dollar last month. Everything else profitable. But out of that, there was, I accidentally deleted the slide. Annoying thing about Snagit. When you do something, you leave it and it's fine. You shut it all down and it saves everything immediately. If you make an amendment to something and shut it down, it says, do you want to save that? And I go, no, I don't want to save what I just changed. So it goes, all right. And it just deletes the bloody thing. Rather than not saving the change and reverting to what you had, like all other software on the planet, this thing goes, oh, well, you obviously don't need that anymore. No, I did need that slide. That one, and the one you deleted for me. The one that you deleted for me I'd written on it how many aggressive drawdown controls there were. I can actually tell you because it's in. I haven't got rid of the actual P&L. I've still got the P&L, but the slide I deleted, or it deleted. But yeah, there's something like 11. I think there's 14 aggressive drawdown controls or something in total, which is a record. Which is why I wanted to do the video because it's not just never had. A move that big before. So if you look at the trades, the actual trades on the portfolio, everything without a comment So that one, 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 that one. They are all aggressive drawdown controls. Yeah. Every single one of them was a failure. $280, 490, 21. Sorry, that's P&L. Profit loss. $286, $500, 2,700. Yeah. My maximum loss I allow on an aggressive drawdown control position is 1%. Yeah. That was 2.7%, one position. Yeah. That one there, 1.1%, 1%, 1%, 1.25%, 1%, 1%, 1.5%. That's where it went wrong. Nothing wrong with the position. I mean, there was obviously something wrong with the position, but the problem was the aggressive drawdown control. So you can see how many there were. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 aggressive drawdown control attempts. All failed. Every single one. Never had more than 4 or 5 before in the past. That was just the worst possible squeeze. And there was no let up. It all happened at exactly the wrong time. The US powered up as the pound dropped. So we were like, okay, we wait for a pullback on that little drop. Sideways drop, sideways drop. That's all we got, wasn't it? Not had it before. So I will do the video on it. But what I want to do is go, right, this was the loss. Yeah. And then I want to do the same thing with this month's P&L. Doesn't have to be with this month's P&L, just when we get out of pound US dollar. Going, right, this is the pound US dollar for September. So that 19 grand loss there, this is the result for September. And put the two together and look at where it went wrong. That's the video I want to put together because that's much more educational. Because people need to see the exit. No point in me doing a video about where it went wrong last month. It's still in it. So we want the final outcome, don't we? So reverse alert's going to trigger in a minute. I'm going to get another entry on the pound US. Please, 82. Yep, we'll do, because that's an ADR away. So another entry going on at an ADR. Nice rejection off that monthly level. Good push going on there. Euro US dollar starting to unravel. US dollar Swiss starting to turn down. US dollar yen starting to turn down. So we'll see. Give it an hour or so. I think there's a good chance we'll be back where we started, but we'll see. See what happens. You need to stop the text from rolling. Good point, Mariam. I didn't think of that one. I can't see the text, obviously, because it's not going along the bottom of my screen, believe it or not. It's on the stream. Yeah, that would help, wouldn't it? GU, UJ trying to work their ways back to where it should, hopefully. Yeah, fingers crossed. We'll see what happens. But whatever happens, happens. So I'll wait and see where we are on Monday, basically. But if we can do that today, that will first of all please the Japanese. I'm in two minds. Is actually screw it. Why don't we let the US dollar rally like crazy? I mean, not that we can let it do anything. It does what the hell it likes. But it would be nice to see it up there because it would also be nice to see the Japanese do that again. Because I will probably get out of all of this then because that first one didn't work. So we'll see. We will see. It will be what it will be. So indices, obviously, as well, will start to try and recoup. So your propulsion gap, obviously, that's the propulsion move. So this is where those sellers entered that. So either they are going to unwind the whole lot, take profit, have a think, or they will add into those shorts and we will just get a second leg down today. One or the other. What's your hourly RSI reading on GU? 40.9 on 21, that is. Do you mean on the dashboard? If you mean the dashboard, that'll be different. 48.21. Dashboard works on candle close. Yeah, not on live candle. Right. Yours is 38. 38? Oh, right. Sorry, I mean on the live. Yeah, 38. Mine's 41. It depends. Are you using close or I'm using median? Using close, reading is 46. Using open, reading is 40. I'll click on it. Depends what you use. And it depends on your broker. Obviously, all broker data is different. So you're going to have ever such a slight variation on everything. I mean, the reading on my dashboard on the EA, yeah, that will work on candle close. And again, yours will be different to mine. Right, I'm going to leave it there. I'm not going to trade the US this afternoon, not going to trade the open. This is rallying back up pretty damn hard, as you can see at the moment. So I get the feeling this might actually just be a fake move, as I suspected, but we'll see. We'll have another look at it on Monday. But there's too much volatility to try and get an entry on the opening range break. So we've got 15 minutes to the market open. So obviously, if that's the 15-minute range and you take it, you're probably going to find if it breaks to the upside, it's going to want to get back up to there. It could just do that. And we could find ourselves literally just accumulate for the entire day in session. Or it could be that as soon as the bell goes, they dump the stock market because they want to pump the US dollar. If that's the case, it's going to break lovely. But the fact of the matter is, we're at the average daily range of these instruments pretty much, and we've done it all in pretty much 5 minutes. So there's very little volume left in the market, which is why you see this movement happening, because there's nothing left. Yeah, they're fighting over basically getting orders placed now. So I'd be very careful if you do trade it. You know, it could fly and it could work absolutely fine. But historically, when you look at other days where we've had big market moves before market open, it doesn't tend to go anywhere a lot of the time. So it's up to you if you want to trade it. I'm not going to trade it this afternoon. I'm going to shut the terminal now. Make sure it doesn't trade it. But yeah, just be a little careful. Maybe have a go if you fancy it, but half risk or something. Yeah. But you're not going to. It's not going to be a rational afternoon. So just be a little careful. XR news caught the US dollar yen. Got caught on the pound US dollar and euro US dollar. Working the reversal. Yeah, the reversal is the best thing to do at the minute. I'm just about to get another long on the pound US. US dollar Swiss. I'm about to get am I? No, I'm not going to get a second on that. I've only got the one on that anyway, because I've just taken one off. That is all my exposure there. CAD Swiss I've got long as well. So that's in profit. So that was the long that I took on Wednesday. So I got out of all the shorts on Wednesday and immediately flipped long. So looking for a push up into that propulsion gap there. 150 ADR today. So looking to get there Monday, Tuesday. US dollar CAD's back in profit, and Euro CAD short is in profit as well. So TP on the Euro CAD short is this propulsion. So I'm going to hold for that. US dollar CAD. Yeah, if that US dollar weakens now with that Canadian dollar strength and we break this low, so that you see this obvious support there, if we break that, there's nothing, absolutely nothing to stop it. There's a tiny accumulation there just before ADR. But other than that, there's nothing to stop it. That is clean price action of buyers pretty much to that low. So you've got a drop of 175 ADR, which is exactly where my TP is at the top of that propulsion gap, which is a 50% retracement on the initial up leg. Yeah, so if that can break that low, that's got a nice load of room to flush. So that's my US and CAD positions. Apart from that, everything else is pretty much flat. It's just the pound US dollar, which, if that is a fake move, will be rocketing off to the upside next week. Please give me the reversal alert. Be nice to get it nice and tight. We've got 2 minutes on this candle. So I'm going to take that reversal alert there. If that doesn't trigger and it pops down a little bit and comes back up, I'll obviously take it later, but I will be getting in again on that one. All right, that's all I've got for you today. I will leave it there. If you need anything, I'll be in Telegram. I'll be back on Monday, 7:50 and 2:20 as usual for the Frankfurt session and the New York session. I'll update you in Telegram. Well, actually, there's not much. Nothing to update in Telegram, really. You can see what I'm in, see what I've done. If anything closes out, I'll let you know. But I doubt anything will today. We're going to struggle to get to targets on anything there, I don't think, today. It's got too much movement to do. So we'll pick it up again on Monday and have a look at where everything is and see what happens with the moves. So, all right, anything you need, I'll be in Telegram. Other than that, have a good weekend, and I will see you guys on Monday. Have a good one.